Hi everyone, welcome back to Be Rich. It's me, Vinod, and I hope you're doing well. And like I shared, the Instagram group, that FIIs they bought 8,539.91 crores net. They bought the day before they bought 1,797, and the 3rd December they bought 3,664. So a lot of you are asking, are we in for another session where they're going to be keep buying? I don't know, maybe not. From what I saw today, what RBI has said about the interest rate not changing, when you see CRR changing, it shows that Indian economy is not going anywhere, that inflation seems to be a big problem, and banks have started tightening their lending also. So it's not easy to borrow money, and even if you can manage to borrow money, it is also difficult to get anything at a lower interest because interest rates are high. So if you look at all that, the money is being choked at this point. Why is it being choked? Because price is still rising at a rate which the RBI feels is not right. Now, this is not the kind of news the FIIs would like and appreciate. That's why the stocks they picked, which I spoke in the previous video, shows you that sectorally, where they're looking at specific sectors where they're investing and they're avoiding and selling specific sectors off. And today, as we were recording, the bank Nifty was down, and a lot of banks and finance companies immediately went down 2 or 2.5% as soon as the news broke about the interest rate. Then some of them have recovered and some of them even have become positive. So, like I said, these are all noise in the market. What you need to focus on is your list of stocks which we have been speaking about, which you've been thinking about. And if you still see value in them, buy. FIIs would probably sell today, maybe they will not sell today. But what you have to focus on, you have to focus on opportunities. That is why even the stocks which are there in our list are mainly in sectors where the FIIs are selling and getting out of. Like, for example, Tata Motors. FIIs, like I said in yesterday's video, are exiting the auto and auto component sector net, meaning they are still buying in that, but they're net sellers in that. So if you see it that way, that's why we're looking at Tata Motors. So sectorially, we look where there are value, where they're throwing away, the baby with the bathwater, as they say, and we see that as an opportunity to buy, and then we move in and we buy. Even companies like Dr. Reddy, Natco, the same idea we use. And FIs have suddenly shown a lot of interest in Dr. Reddy, and they've been buying Dr. Reddy too, but they're not being buying it at a pace where we still can't enter it. So keep that in mind. These stocks are very fluid. Our list is very fluid. You don't need to keep checking on it on a daily basis to see, if something should go in and out of our list. That will not be productive. But what you should do is, as we're nearing the point where we can't look into considering, then we look at maybe some other options. As of now, whatever the list we have drawn up so far, you don't have to worry about it. Most of them are still at great value, and you can seriously consider them. And like I said in the previous video, if you have some cash on your table and you do not know what to buy or you're hesitating to buy, there's always gold which you can look at, and look at investing in some gold right now, because the way the inflation data stands around the world and what Donald Trump is barking about, definitely gold is going to move. I don't know how much it will move, but logic dictates that it will move forward. So these are the kind of ideas you should keep in mind. And like I said, December is a month where the FIs usually don't do much. So I do not know up to what point they'll really participate in this market. Then they'll go on to the Christmas holidays, because Christmas is just less than 20 days away now. So New Year's is there. And then Trump's inauguration comes in Jan 20th, I think, is the inauguration date which has been set. So there's going to be a period of volatility during this time. And when you see that opportunity opening up, do think about moving in at different coffee ranges. And I stress the reason why I'm saying different coffee ranges. That is money which you can afford to lose. Lose in the sense not throw away. Lose in the sense, if the value, let's say, from 500 rupees becomes 200 rupees or 100 rupees, you will not lose your mind over it. Because one of the main things that, like I said in our morning discussion in our group, was about fear and anxiety and depression. These are very true things and they're very relevant. And more so in the case of investors like you and me, and value investors. The reason why these are very relevant is, any form of investing, we tend to look at our emotions, and it plays on our emotions, and it can lead to anxiety. Anxiety can lead to depression. And if you're already prone for this, it can only amplify it and make it worse. So do tend to be kind to yourself out there, and be patient with yourself, and do not rush into things, and do not get consumed by FOMO. A lot of us are having FOMO. Like one of the members in our group had said, he's still busily closing all his debt. He's got a lot of debt, and he's taken Anand's advice to heart, and he's closing all his debts. And as he's closing these debts, he can't close them fast enough because he's seeing the market. He's seeing the market's going down. He's seeing Natco being at at a price where everyone is looking at considering it. He's seeing Manappuram, or he's seeing whatever in the market, and he's feeling left out because he first has to close these loans. I understand that. And my advice would be stay your course, right? It's like in anything we do. We do see other people making different progress from us because either they started the journey earlier or their position is such that they're in a different place in their journey compared to us. So you really can't compare yourself to everybody else. And that's where FOMO comes from. FOMO comes from you comparing yourself to your neighbor or someone online. And especially in the day of social media, it makes it worse, where we're constantly scrolling, doom scrolling. And I would strongly suggest you stay away from social media, especially people who are in the process of learning how to invest, learning how to close their loans, because you get pulled away from what you should need to be focusing on. Especially if you borrowed this loan and created all these loans around you, buying things you really don't need, you should definitely stay away from social media and even not be watching YouTube till you get your affairs into order. I know it sounds counterproductive that I'm sitting on social media telling you not to consume social media, but you're here and you need this message. For the rest of us, yes, it makes sense. But if you are an individual who's already in a mess, I would suggest that you first unplug yourself so you don't suffer from FOMO. FOMO can only happen if you're constantly comparing yourself or you're seeing other people making progress and you're feeling left out. If you don't have that constant comparison happening, then FOMO becomes very small and residual. So delete all of these social media apps on your phone and focus on your work, focus on closing these loans. Once you've finished closing these loans and everything has been put to bed, then you can always install these apps and always come back. Me and Anand have been here for years. We're not going anywhere. The market has been, even before I was born, it's been here. And before Anand was born, it's been here. There have been opportunities plenty. You're young, you're working, so opportunities are going to come. Trust me on this. If you are in this journey and the beginning of your journey and you're stressed about all the loans which you have, no worry. We've all been there. Even I've had loans which I didn't want, which I took, which was unnecessary. Then Anand helped me close these loans and I moved forward. None of us are perfect. All of us are imperfect. And we're in this journey trying to get to a place where we're mentally sound and financially free. That said, when you look at the larger scheme of things, like I said in the previous video about making to the first 1 crore and then reaching 20 crores or 10 crores or whatever, these are just numbers, they're just goalposts. Don't be very strict on these things. Learn to be flexible in life, right? And to live life now and then. I'm not saying from one extreme to the other. Try and find a medium in the middle. Life should be meaningful. Investing should be meaningful. We do everything in life to have meaning in it and find joy and happiness in it. Whatever you're doing should not lead you into further anxiety and further depression. So if this is adding to your anxiety and depression, take a break from it, especially investing. Investing should be even a happy and joyous thing which you're doing, where you're like how you buy things and gives you joy in life. Same way investing should be. When you are putting some money into a company and watching that money grow and watching that company grow and that business grow, it should give you a sense of satisfaction and fulfillment. If it's not doing that, then definitely take a break and then come back to it when you're feeling better. Nobody's going anywhere. And there's plenty of time, especially considering most of you, my viewers, are in your late 20s, early 30s. Don't worry about it. And as far as what's happening globally and what is happening, in the US and what's happening in Europe, all these, yes, like what was happening in South Korea, where the martial law failed. There is political turmoil world over. And these are going to create opportunities for investors like you and me. Usually, political turmoil world over means you immediately worry about the future of the world and you worry about job security, and all those are real and all those are true. But at least from the investment point of view, usually this kind of instability worldwide creates market turbulence and that opens up opportunity. How fast will this turbulence happen? No one can predict. And when will it happen? We cannot predict. For example, in the US in 98, the stock market was in the cusp of being very expensive. Everyone said it was expensive. And from 98 to 99, it went up almost 100%. So you can imagine, they said it's expensive. From 98 to 99, the American market went up almost 100%. Then they said, oh my God, it's very expensive. Dot-com bubble was just about to reach. From 99 all the way to 2000, it went zooming. Then suddenly it cracked in 2000, then it fell and took a few years to slowly come out of it. So I do not know where in this chart we are, because it's inevitable. Markets are cyclical. We will have a major correction. When is it going to happen? I do not know. How will it happen? I do not know. But where we are standing from, it is pretty much sure we are not at the bottom of a wave. We are either in the middle or we are approaching the top of the wave. There's no way this can be the bottom of the wave, because we have been riding this for quite some time. So that's why I'm saying be patient. That is the main reason I say stay in, ranges where you're comfortable in being. Don't over leverage yourself and drop a lot of money, because a lot of you are asking, should I borrow and invest and things like that. Please do not do all that. This is not the situation or the time or place to do anything of that sort. Even if the market crashes, I would not advise you ever to borrow and invest and to try and flip it and all those things, because I'm not a believer in that. And I would strongly dissuade you from that, because like I've said 100 times, life happens when you're busy making other plans. So be careful when you decide to do anything of that nature. I understand everyone has a sense of urgency when it comes to money. Everybody would always like a little more money than they have right now, but learn to be patient. Like I said about the story about the person who had commented on one of our YouTube videos that his father had bought Manappuram stock 15-20 years ago, because that company was in their hometown and he had invested around 5,000 rupees. And in the last 20 years, that 5,000 rupees was the amount of stock he had bought, with all the bonuses, splits, and everything else, dividend, everything, has ballooned up to 40 lakhs now as a corpus. And they're busily making sure they can make the securities into a demat and secure it and plan to hold on to it. So that is how great wealth is built. If you are a person who unfortunately didn't have a background where your parents or your grandparents did not leave you a legacy for you to hold on to and build on, no problem. You start building your legacy and your family's and future's legacy now. If anything, even if you don't have the life you imagined when you were a child, by investing and saving, you can at least create the life you imagined for your future children and grandchildren, if that is something you can wrap your head around. I know some of you are very young, like my cameraman Rupesh and Arun, who are not married, and especially Arun can't think of, sir, why should I be wasting my time to invest for my kids? I'm not even married as yet. Tell me something where I can make money now. Unfortunately, it doesn't work like this, at least not in value investing. So keep that in mind. There are opportunities there, like I said, in Anand's Patas list if you keep looking at it. A lot of you have been asking me, what is this watch which I'm wearing? I don't know why the fascination about this watch. It's just a Seiko watch. It's not an expensive watch. It's something my brother gave me actually, and I'm just wearing it. I didn't know it garners so much attention. The first time something like this is happening to me, I guess, where someone is fascinated with the watch. Yes, I know there's a lot of watch aficionados out there. I'm not one. This is something my brother gave me, and I'm wearing it. Anyway, if you enjoy the watch, so be it. If that is going to spark some investment ideas for you, I'm happy for you. Thanks for watching the video. As always, do subscribe and follow. Tomorrow I'll try and bring Anand in over the weekend and do a couple of videos with him. And maybe we'll talk about some specific stocks in India or maybe some specific stocks in the US. Do watch out for that. Thank you again for watching the video today. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for the Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.